Picture a world where one nation, crushed under a mountain of debt, rewrites the rules of global finance. Not with tanks or treaties, but with invisible code, blockchain humming silently, shifting trillions. Pause. Could the United States, the titan of the dollar, be plotting to erase $37 trillion in debt by weaponizing cryptocurrency? This isn't a fevered Reddit thread or a late-night conspiracy podcast. It's a bold accusation, whispered from the stages of global power that could reshape your life, from the coffee you sip to the savings you guard. Take a breath. This is no fiction. It's a warning, sharp and deliberate, from a Russian advisor at a high-stakes economic summit. The claim: the U.S. is crafting a digital gambit to offload its staggering debt onto the world. Stablecoins, those sleek dollar-pegged tokens, might be the Trojan horse. Sounds like a blockbuster plot, right? Yet the logic behind it is chillingly precise. A chess move calculated to keep one nation atop the board while others scramble. Why should you care? Because this isn't just about Wall Street or Washington. It's about the price of your groceries, the stability of your job, the value of your money. If true, this plan could ripple across borders, hitting open economies hardest, nations like Singapore, Ireland, or Chile, where trade fuels life. Will the U.S. risk its dollar empire for a crypto reset, or is this a rival's ploy to sow doubt? Let's pull back the curtain piece by piece and uncover what's at stake. Ready? Let's begin. A shadow looms over the global economy. The United States, the world's financial colossus, is drowning in a $37 trillion debt, a figure so vast it defies comprehension. Pause. That's a burden heavier than the GDP of most nations combined, chaining every citizen from infants to retirees to a lifetime of obligation. Now imagine a scheme so audacious it could rewrite this debt story. Not through repayment, but through a digital sleight of hand. This isn't speculation from the fringes. It's a bombshell dropped at a Russian economic forum by Anton Kobiakov, a confidant of President Putin. His accusation: the U.S. is orchestrating a plan to dissolve its crushing debt using cryptocurrency and stablecoins. Take a breath. This isn't a casual claim, it's a flare shot across the bow of global finance, suggesting a superpower is weaponizing blockchain to shift its burden onto the world. Picture it: a nation that prints the world's reserve currency, trusted by markets, now accused of plotting to sidestep its IOUs through digital alchemy. The stakes, monumental. If true, this could upend the financial order, shaking trust in the dollar, the bedrock of global trade. Why does this matter to you? Because the dollar's dominance isn't just Wall Street's concern, it's the pulse of international commerce, from oil prices in London to tech imports in Dublin. A U.S. move to reset its debt could send shockwaves, hiking the cost of everything: your morning latte, your car's fuel, your mortgage. Economies open to global trade, like those in Singapore or the Netherlands, would feel the tremors first. But is this a masterstroke to preserve U.S. hegemony in a digital age, or a rival's calculated jab to erode faith in the dollar, pushing the world toward a new financial frontier? Let's step back. The U.S. debt, ballooning past $37 trillion, isn't just numbers on a ledger. It's a ticking clock, a pressure mounting on a system built on trust. Stablecoins, digital currencies pegged to the dollar, aren't just tech toys, they're potential conduits for this grand maneuver. The claim suggests the U.S. could leverage these tokens to dilute its debt's weight, spreading the cost across borders. Pause. Imagine a chessboard where the U.S. moves pawns, stablecoins, to protect its king, the dollar, while others scramble to counter. Russia's warning isn't just a headline, it's a call to question the rules of the game. What's at stake? If the U.S. pulls this off, it could cement its financial rule, forcing nations and citizens to bear its debt's shadow. But failure risks shattering the dollar's trust, accelerating a global pivot to alternatives: gold, rival currencies, or new systems. For open economies, the fallout could be brutal: inflation spikes, trade disruptions, capital flight. This isn't distant geopolitics, it's a storm that could hit your wallet. So is the U.S. bold enough to gamble its credibility? Or is Russia stoking fear to weaken a rival? Let's dig deeper into the mechanics of this alleged plan. How does a nation erase a mountain of debt without admitting defeat? Picture a magician, not with a wand, but with a printing press, or today a digital ledger. Debt devaluation is the trick, a sleight of hand that shrinks obligations without a single coin repaid. Pause. It's not bankruptcy, it's not default. It's a calculated move to rewrite the value of money itself, and the U.S. has mastered this art for decades. Let's unravel the mechanics step by step, and see why it's both genius and unsettling. Imagine you're at a bustling market. You lend a friend euros 100, enough for 2 hearty meals at a local cafe, say a plate of pasta and a glass of wine. They promise to repay you in full. Months pass. They hand you back euros 100, crisp and exact. You're satisfied, right? But here's the catch. In those months, the economy's been flooded with new euros, quietly printed. Prices have doubled. Your euros 100 now buys only one meal, not two. What happened to the second meal? It vanished, swallowed by inflation. Your friend technically kept their word, but in reality, they've paid back half the value. You've been outplayed, and they walk away smiling. This, dear listener, is debt devaluation, a silent erosion of what's owed. The US has wielded this tactic before with devastating precision. Take a breath. After World War II, they pumped dollars into the global system, diluting their debt's weight as prices rose worldwide. In the 1970s, they did it again, unpegging the dollar from gold, letting its value float and fall. Most recently, post-COVID, the US unleashed trillions in stimulus, flooding markets with dollars. The result? Prices soared. Think of gold spiking, homes in London or Berlin doubling in cost, even a loaf of bread at your corner store creeping up. Who bore the cost? Not just Americans, but anyone holding dollars globally: traders in Amsterdam, savers in Santiago, investors in Seoul. Pause, this isn't new, it's history's playbook. But now the game's evolving. The US isn't just printing paper dollars anymore. They're eyeing a digital frontier, cryptocurrency, specifically stablecoins, as the new tool to pull off this trick on a global scale. Why? Because the stakes are higher than ever. That $37 trillion debt isn't just a number. It's a chain dragging on the US economy. Devaluation through crypto could lighten that chain without a public admission of weakness. It's a move cloaked in innovation, wrapped in the allure of blockchain's promise. How does it work? Stablecoins like UST are digital tokens pegged to the dollar, designed to hold steady value. But here's the twist: they're not just tech marvels, they're potential pipelines for debt. When you buy a stablecoin, the issuer, say a tech firm in Silicon Valley, takes your money and often invests it in US Treasury bonds, the very debt the US owes. Suddenly, your purchase isn't just a transaction, it's a loan to the US government, funneled through a digital veil. Multiply this by billions of transactions worldwide: merchants in Dublin, startups in Lisbon, traders in Cape Town. The US absorbs global capital, easing its debt burden while you hold a digital IOU. The brilliance: it's invisible. No central bank announcement, no congressional debate, just a quiet shift where the world unknowingly funds America's debt. But the danger: if the US devalues the dollar, say, by tweaking the stablecoin system or flooding it with new digital dollars, the value of your holdings shrinks. Your euros 100 in stablecoins might buy less, just like that market meal. The US wins, shedding debt. The world loses, holding diluted value. This isn't just economics, it's power reshaped through code. Let's explore how stablecoins amplify this game next. Imagine a world where every digital transaction you make secretly funds a superpower's debt. Stablecoins, those sleek dollar-tied digital tokens, are more than a fintech fad. They're a hidden pipeline funneling global wealth into America's $37 trillion debt machine. Pause. This isn't just innovation, it's a masterclass in financial strategy cloaked in the sheen of technology. Let's peel back the layers and see how stablecoins could be the U.S.'s boldest tool for exporting its debt and what that means for the world. Stablecoins like UST promise stability. Pegged to the dollar, they're marketed as a safe harbor in the wild seas of crypto volatility. You use them to send money across borders, say from London to Sao Paulo, instantly bypassing sluggish banks. Sounds revolutionary, right? But take a breath. Behind every stablecoin lies a quiet truth when you buy one. Your money doesn't just sit in a digital vault. Issuers like tech giants in California often park those funds in U.S. Treasury bonds, the very debt the U.S. owes the world. Each purchase, each transaction becomes a loan to America, slipped into the global bloodstream without fanfare. Picture a small business in Stockholm wiring funds to a supplier in Singapore. They choose UST for speed. Click, transaction done. But behind the scenes, a fraction of their payment flows into U.S. debt securities. Now scale that up: millions of transactions daily, from freelancers in Barcelona to startups in Nairobi. The US taps a river of global capital, no congressional vote needed, no Federal Reserve press release. It's a shadow system dressed as progress. Stablecoins, with their market cap soaring past hundreds of billions, aren't just currency. They're a global crowdfunding campaign for US debt. Why is this so clever? Because it's invisible. Pause. Unlike printing physical dollars, which sparks inflation alarms at home, think skyrocketing gas in New York or groceries in Chicago, stablecoins spread the cost worldwide. If the US tweaks the dollar's value through this digital web, the pain hits globally. Your stablecoin savings in Lisbon or Lagos lose purchasing power not because of local markets, but because a switch flipped in Washington. It's a tax. Subtle and borderless, paid by anyone holding these digital dollars. The US lightens its debt load while you unknowingly foot the bill. Let's zoom in. A tech startup in Dublin buys USK to pay a developer in Bangalore. Seamless, fast, modern. But that USK purchase fuels a US Treasury bond buy, propping up America's debt. Multiply this across countless deals: retailers in Cape Town, exporters in Rotterdam, investors in Tokyo. The US debt machine hums, fed by a global network that feels decentralized, private, even futuristic. No White House seal, no Fed logo. If a tech titan like Apple launched its own stablecoin, you'd think it's just innovation, not geopolitics. Yet every token remains tethered to the dollar and thus to America's financial empire. What's the global fallout? If the US devalues its debt through stablecoins, say by flooding the system with digital dollars, the ripple hits hard. Your digital wallet in Berlin might buy fewer groceries. A business in Santiago faces higher import costs. Open economies like Ireland or Chile feel the squeeze first, as their trade relies on dollar-based systems. Pause. This isn't just about money, it's about power. Stablecoins could let the US rewrite the rules, making the world unwitting lenders in a game few see coming. But not everyone's playing along. Nations are pushing back with gold. That's next. The world's financial chessboard is splitting. On one side, the US pushes a digital future, stablecoins, blockchain, a dollar-driven reset. On the other, a quiet rebellion brews, not with code, but with a metal as old as civilization, gold. Pause. Why are nations like Russia, China, India, and even Turkey hoarding gold at a pace unseen in half a century? It's not nostalgia. It's strategy, a shield against a US plan that could reshape global wealth. Let's uncover why gold is their weapon and what it signals in this high-stakes game. Gold gleams with a power no digital token can match. It's tangible, unyielding, untied to any server or government's whim. While the US spins a vision of a crypto utopia, these nations are betting on a metal that's outlasted empires. Take a breath. Central banks globally are amassing gold at record rates, thousands of tons locked in vaults from Moscow to Beijing. This isn't a trend. It's a counterstrike. They see the US's stablecoin Gambit as a move to export its $37 trillion debt, and they're not buying it. Their distrust runs deep, rooted in a betrayal that still stings. Rewind to 1971. The US, led by President Nixon, made a choice that shook the world. Overnight, they severed the dollar's tie to gold, breaking a sacred promise. Every dollar they'd sworn was backed by gold's unyielding value. Nations trusted this, piling dollars into reserves. Then in one TV broadcast, the rules changed. The dollar became fiat paper, sustained by faith in US might alone. The world felt cheated, left holding dollars now untethered. Pause. That scar fuels today's gold rush. If the US claims stablecoins are backed by Treasury bonds, who's to say they won't cut that cord again? Imagine waking to news that stablecoins can't be redeemed for dollars. Your digital wallet, whether in Warsaw, Nairobi, or Sao Paulo, turns to dust. The US sheds debt, you lose. Gold is the antidote. Russia, battered by sanctions, dumped US treasuries for gold, building a fortress of bullion. China quietly stacks thousands of tons, a silent challenge to dollar dominance. India and Turkey follow, hedging against a system they fear could collapse under US ambition. Gold's strength lies in its independence. No internet. No New York data centers, no audits by distant firms. Hold a gold bar in Frankfurt or Mumbai and it's yours, untouchable by remote decree. In a crisis, what's safer? A digital code that could vanish with a policy shift, or a metal proven through millennia? But gold isn't just a shield, it's a spear. The BRICS bloc, Brazil, Russia, India, China, South Africa, isn't just hoarding. They're plotting a new financial order. Pause. They're crafting a payment system to rival SWIFT, the US-controlled backbone of global finance. They've floated a BRICS currency, possibly gold-backed, to challenge the dollar's reign. Picture a BRICS gold coin, a digital token tied to gold issued by their central banks. Suddenly, the world splits. One currency stream flows through US stablecoins, another through gold-backed BRICS money. This isn't defense, it's an offensive to break America's grip. The stakes are colossal. If BRICS succeeds, global trade could pivot, weakening the dollar's stranglehold. Economies like Ireland or Chile, tied to dollar-based trade, would face a choice: align with the US or a new gold-backed system. For now, gold is their ammunition, a strategic reserve like a pantry stocked for a storm. It's not perfect, you can't pay for coffee in Amsterdam with a gold nugget. But for nations, it's insurance against a US-led reset that could devalue their wealth. The question looms, how will smaller economies navigate this clash of titans? That's next. A financial storm brews on the horizon. If the US triggers a crypto reset to dissolve its $37 trillion debt, the shockwaves won't just rattle Wall Street. They'll crash into the lives of everyday people in open economies like Ireland, Chile, or Singapore. Pause. These nations, thriving on global trade, are the first to feel the tremors of a dollar-driven upheaval. From the price of your morning coffee in Dublin to the cost of a bus ticket in Santiago, no one escapes the fallout. Let's map out how this bold U.S. Gambit could reshape smaller economies and what it means for you. Open economies live and breathe trade. Nations like the Netherlands or New Zealand, where exports and imports dwarf their GDP, are tethered to the global financial system, often through the dollar. Picture a small business in Auckland exporting dairy to Asia, paid in dollars via stablecoins. Now imagine the US unveils a digital dollar, subtly weaving its debt into this new system. The dollar's value wavers, prices spiral. That business faces a brutal reality. Their earnings buy less, their costs soar, and their margins vanish. Pause. This isn't abstract. It's the bread on your table, the fuel in your car, the rent you pay. First, inflation would strike like lightning. If the US devalues its debt through a crypto reset, the dollar's purchasing power could plummet. In open economies, where goods like oil, tech, or grains are priced in dollars, costs would surge. Take a breath. A cafe in Lisbon sees coffee bean prices double. A factory in Malaysia pays more for machinery. Consumers feel the pinch. Your grocery bill in Copenhagen climbs, not because of local harvests, but a switch flipped across the Atlantic. The US offloads its debt. Smaller nations absorb the pain. Second, imports turn into a chokehold. Open economies rely on foreign goods. Think electronics in Ireland or raw materials in Chile. A devalued dollar makes these pricier, squeezing businesses. Picture a tech firm in Tallinn importing components. Overnight, costs spike, forcing them to raise prices or cut jobs. The ripple hits workers, families, communities. Your smartphone in Stockholm costs more. Your favorite wine in Cape Town becomes a luxury. The U.S.'s digital maneuver shifts its burden onto global supply chains, and smaller economies with less power to push back bear the brunt. Third, capital flees like a startled flock. Investors, sensing risk, pull funds from vulnerable markets. Think emerging hubs like Warsaw or Bogotá back to the U.S., seen as a safe haven. Recall how a Federal Reserve rate hike can jolt stock markets in smaller nations. Now amplify that. A crypto reset could trigger a capital exodus, tanking local currencies and markets. A startup in Helsinki loses funding, a pension fund in Auckland shrinks. Pause. Your savings, your job, your future tied to a game played far away. But the deepest wound isn't economic, it's sovereignty. If the US enforces a digital dollar, every transaction from a Lisbon retailer to a Singapore exporter flows through a US-controlled system. Every click, every transfer tracked. Take a breath. The US already wields this power. Look at how they froze assets during global conflicts, locking funds with a keystroke. If a nation like Ireland or Chile diverges from US interests, could their trade be throttled, their data weaponized? This isn't just finance, it's control, a digital leash on global commerce. Smaller economies face a stark choice: align with the US system or seek alternatives like gold or regional currencies. But going rogue risks isolation, trade sanctions, market exclusion. For nations like Denmark or Malaysia, neutrality is a tightrope. The US's crypto reset could redraw power lines, forcing smaller players to pick sides in a financial Cold War. What's the way forward? That's next. Can the United States, the architect of the modern financial world, pull off a crypto reset to erase $37 trillion in debt? It's a gamble of historic scale, a high-wire act over a global economy. Pause. The US wields unmatched power, military, financial, technological, but even giants stumble. This plan, if real, balances on a knife's edge with risks that could topple the very empire it aims to save. Let's weigh the U.S.'s strengths against the dangers and see if this bold vision could reshape the world or backfire spectacularly. The U.S. is no ordinary player. Its military might spans the globe, with bases from Germany to Japan, ensuring no nation dares challenge its will lightly. Financially, the dollar reigns supreme, powering over 80% of global transactions. SWIFT, the backbone of international payments, bends to US influence. Think of how sanctions can freeze a nation's wealth in hours. Take a breath. Then there's technology. Silicon Valley, home to Google, Apple, Amazon, builds the world's digital scaffolding from cloud servers to blockchain protocols. This trifecta of power gives the US a unique edge, the muscle, money, and tech to push a crypto reset the world can't easily refuse. Imagine the plan in motion. Stablecoins flood global markets. Seamlessly integrated into trade, retailers in Paris, exporters in Auckland, startups in Lagos all adopt them. A digital dollar backed by US policy becomes the new norm, absorbing debt into its code. The US could dictate terms, leveraging its dominance to ensure compliance. Who could resist? Smaller economies like Ireland or Chile rely on dollar-based trade. Defying the US risks exclusion from global markets. Even giants like China or the EU tread carefully, wary of economic retaliation. The US has the leverage to make this stick, reshaping finance and its image. But pause, power doesn't guarantee victory. This plan is a house of cards, fragile under scrutiny. First, the economic risk. Trust is the dollar's lifeblood. If the US openly uses stablecoins to devalue debt, it could shatter faith in the dollar. Picture a friend who borrows endlessly, always dodging repayment. Would you lend again? Nations might say no, accelerating de-dollarization, swapping dollars for gold, yuan, or euros. Russia and China, already skeptical, could rally others to reject the US's digital dollar, fracturing global finance into rival blocs. Politically, the US risks uniting its foes. Pause. Tensions simmer in Europe over Russia, in the Middle East over Iran, in Asia over China. A brazen financial reset could galvanize adversaries, forging unlikely alliances. Imagine a Russia-China pact backed by gold and oil, pushing a new currency system. Smaller nations, Brazil, India, South Africa, might join, sensing a chance to escape US dominance. The BRICS bloc, already testing swift alternatives, could turn this into a geopolitical revolt, weakening the US's global grip. Technologically, the US faces rivals. China's digital yuan is years ahead, used in cities from Shanghai to Shenzhen. India's UPI powers billions of transactions, a model for the global south. Russia experiments with blockchain-based payment systems. The US no longer holds a tech monopoly. If key nations, say the EU or ASEAN, opt for alternatives, the crypto reset falters. It's like offering a new currency no one accepts. The world could split, with the US system on one side and a gold-backed or regional network on the other. Then there's domestic pushback. Americans prize freedom. A digital dollar tracking every transaction could spark revolt. Pause. Picture citizens in Texas or California rejecting a system that feels like surveillance, akin to China's WeChat Pay. Protests could erupt, Congress could stall, and public trust could crumble. If Americans reject their own reset, the plan collapses before it starts. Take a breath. This is a poker game with the highest stakes. The US bets on a crypto ace, but if the world calls its bluff, the dollar's throne could crack. The risks are clear. Success hinges on global compliance, but defiance is growing. Failure could unravel the US's financial empire, pushing the world toward chaos or a new order. What can nations and people do to brace for this storm? That's next. The world stands at a financial crossroads. The US dangles a digital dollar, potentially offloading its $37 trillion debt onto global shoulders. Across the board, Russia, China, and BRICS counter with gold, forging a rival system. Pause. Smaller economies, think Ireland, Chile, Singapore, are caught in the crossfire, unable to dodge the tremors of this currency war. Yet in this chaos lies opportunity. Nations and individuals can act, not just survive, but thrive. Let's chart a path forward with strategies to shield against this storm and a call to shape your own future. For nations, the playbook is clear but urgent. First, fortify gold reserves. Gold isn't just a relic, it's a firewall against monetary upheaval. Countries like the Netherlands or New Zealand can't match China's bullion race, but boosting reserves offers a buffer. A single ton of gold could anchor a currency when digital dollars waver. Second, diversify currency holdings. Leaning solely on the dollar is a trap. Pause. Stockpiling euros, yuan, or even Indian rupees spreads risk. If the dollar falters, a mixed portfolio keeps trade alive. Think of a Lisbon exporter hedging with yen to pay Tokyo suppliers. Third, build independent financial infrastructure. Regional systems, like an EU or ASEAN blockchain network, reduce reliance on US-controlled SWIFT or stable coins. Imagine a digital payment hub linking Dublin to Santiago, free from external chokeholds. Fourth, invest in tech, blockchain, cybersecurity, fintech. Nations like Denmark or Malaysia must innovate to avoid being pawns. A united regional front like ASEAN or the EU amplifies their voice against giants. Individuals, too, must play this game. Pause your wallet, your savings, your life. They're all on the board. First, diversify assets. Don't bet everything on dollars or stable coins. Gold, though not pocket change, holds value. Consider small investments like coins or ETFs. Euros, bonds, or even crypto like Bitcoin untied to any nation. Hedge against a dollar dip. Second, stay informed. This isn't just news, it's your shield. Track central bank moves, like the ECB's or Chile's, to spot shifts early. Knowledge lets you pivot. Maybe you buy gold in Berlin before prices spike. Third, rethink spending. If inflation hits, prioritize essentials, stock up on staples in Stockholm or cut luxury buys in Cape Town. Fourth, engage locally. Support businesses using regional payment systems like UPI in India or SEPA in Europe to weaken the dollar's grip. Your choices shape the battlefield. Take a breath. This isn't just about nations or markets, it's personal. A US crypto reset could hike your rent in Dublin, your groceries in Auckland, your fuel in Bogota, but you're not powerless. Every decision, saving in gold, learning the game. Voting for leaders who prioritize sovereignty tilts the scales. Pause. Picture a global chess match. The US moves its digital knight, Russia and China counter with golden rooks, and smaller players like you hold hidden pawns. Played wisely, those pawns can checkmate giants. What's the bigger picture? The US risks its crown, trust in the dollar to maintain dominance. BRICS bets on gold to carve a new order. Smaller nations and citizens, caught between, must navigate with cunning. This isn't just a crisis, it's a chance to redefine power. Will you be a spectator paying the price of others' moves, or a player shaping your future? Pause. The choice is yours. Reflect on this. Is the US's plan a brilliant stroke or a reckless bet? Share your thoughts below. If this opened your eyes, like, subscribe, and share to spark this conversation. Let's decode the future together. Thank you and stay sharp.